The next thing that we are interested in is the development of the market. And here again, we have this breakdown of both the base market and the core market. So starting from the population of Germany, going all the way down to the offline channel that we just saw. And now we are interested in the development of that market within the next 4 years. So here you can see that on the left, I'm starting with the numbers of 2023. And then right next to them, I'm showing the CAGR of these till 2027. Overall, this gives us a decline in the base market from some 72 billion down to some 68.1 million, which corresponds to a CAGR of minus 1.4%. And on the lower half of the slide, we can see that for the core market, we go down from some 4.1 billion to some 3.1 billion, which is a decline of even 6.5% on average per year. You can also see the CAGRs of the individual line items a bit on the left, and on the right hand side I'm providing a comment as to give some qualitative insight into why these developments are happening. Now, starting from the top, you can see that the population and also the share that's aged 13 or plus is not really changing that much. The median annual disposable income is going up a bit, and the explanation for that is, actually it used to go up a lot more, as we will just see on the next slide, I think from 2021 to 2022. But going forward, we only expect minor growth as inflation moderates while purchasing power of consumers is still constrained. We expect the share of wallet spent on fashion to decline due to consumers prioritizing essential expenditures over discretionary spending amid economic uncertainties. So as this case is taking place in the aftermath of the COVID crisis, this is the reason why we still have these effects. And we also expect a shift in consumer preferences towards second-hand fashion and rental services, which will drive down the share of wallet spent on fashion as well. Now, when we look at the lower half, you can see that the main drivers are really the only two drivers of the core market shrinking are the mid-market that's declining and the offline channel that is declining. So the mid-market, it's shrinking because it's overcompeted, and that's something we will see in the model as well. I have a table with the number of brands, and really I think it's the second most competed segment by brands. On the other hand side, it's also a bit stuck in the middle and thus lacking the margins for going more premium through sustainable fashion, for example, while the cost base is too high for becoming a fast fashion player, which are attacking from the lower price segments, let's say. And the shift towards online shopping is still continuing, so that's also why it's putting you at a disadvantage if you only operate brick and mortar stores. So summing up, these four are the main drivers of market development. The other items do not change as much or not at all. Now for the model and also to validate the sales numbers, we need this on a timeline. So that's what we have here on this next slide. You can see the market breakdown from 2021 to 2027. Here you can see that in 2022 there was this weird increase in market size because of, recovery from the COVID-19 crisis, but it was kind of a non-sustainable recovery, let's say, and that's also why we're having a declining market after 2023. The key driver really between 2021 and 2022 was that disposable income was going up significantly by some 6.1%, which wasn't sustainable, let's say. I think going forward it's expected to be something like plus 1.5% at the moment. Other than that, there's not new information, I guess, on this slide besides what we just saw. So overall, the core market is declining going forward, and that's driven by a declining mid-market and a declining offline channel. At the same time, the size of the base market is also expected to go down a bit in the future, and that's because the average share of wallet spend on fashion is expected to go down a bit from some 4.5% to some 4.0%, which doesn't sound much, but it's driving it down a bit. Also, the population is slightly decreasing, but again, I can show this in more detail in the model afterwards. Now, before we go into the details of this next slide here, let's first take a step back and ask ourselves again why we're doing this. So usually when you go to a client, they have an idea of their future sales, and your job is to validate these numbers and challenge that if they really make sense. And to do that, you need to understand the market. And while so far we primarily looked at demand, we also need to look at the supply side of things to really understand if those sales figures could eventually evolve or not. And that's what we're doing here. So we're starting with the size of the core market that we just derived on the previous slides. And then we're taking the client's plan for their sales numbers, which you can see as the second line item here, and also put the growth rates year over year on top of these. And based on this, we can calculate an implied market share, which you can see here was some 0.7% throughout the last 3 years, and they expect that to go up, in fact, a little bit. Or not just a little bit, if it goes up by 0.7%. If it goes up from 0.7% to 1.2%, that's almost double. So we need to challenge that. And to do that, I propose to eventually derive a so-called baseline market share, so market share that we expect. And based on this and the size of the core market, to then derive their actual sales numbers that we expect. So that would be the baseline sales old-fashioned, the lowermost item here. To contrast this a bit, there are also markets that are limited by supply rather than demand. So for example, if you looked at the market for automotive chips in 2022, it was clearly limited by supply, not by demand. There were a lot of automotive OEMs and other players in the industry, especially suppliers, that were desperately looking for chips but couldn't get any. So in this case, market size was not defined by demand but by supply. But here it's really the other way around. And that's also why competitive intensity and positioning are some things that we should really have a look into. To get back to the slide, on the right-hand side, you can see a box for the client's perspective and an outside-in perspective from us, from the consultants. So what the client did, and this is something that happens more often than I expected it to happen, is they just extrapolated the historic growth pattern. So they had a plus of some 6% from 21 to 22, and then of some 10% from 2022 to 2023. And they just expected that short peak to continue for another year, and then a little less conservative growth of, again, something like 5%. And the problem really with that is it ignores trends in the industry, it ignores the competitive intensity and positioning and how these interact with, well, your actually to be expected market share. So here, from a first look at the competitive landscape and their financials, I think it's reasonable to expect a slight increase in market share because of the high concentration of the mid-market segment. It's likely to kick out some players out of the market. And well, if you survive that, this could be or will be a good thing for you. Also, usually in such situations, industry consolidation is a topic. So as this at first comes with some costs, it might as well drive up your market share a bit because your cost base will be more competitive, at least in the short run when economies of scale are not yet applicable to those consolidated now. In terms of competitive positioning, as you can see in the numbers, I think it's marketing and licenses, so it's not clear cut, but they have a high marketing spend of some 1 million euros each year, and that might have finally paid off and provide for some sustainable brand differentiation. But these are just first hypotheses at the moment, and we will finalize old-fashioned baseline sales in phase 3, also leveraging additional strategic insights from phase 2. Now, as you can probably tell from comparing this to the financial models, this so far was much more subjective, and that's why we need a quality assurance to make sure that we still get some reasonable results, and that's why we apply triangulation. So the idea of triangulation really is just to look at this from different angles in terms of methodology. It depends on the market, how you want to weigh those. If it's a very unknown niche market, you usually go mostly for expert interviews. If it's a well-known market, you can use chatbots, you can do consumer service. There will be market research on this. Eventually, you have to decide on your triangulation mix based on your budget. That's also important because, for example, expert interviews are rather expensive. The time that you get available, and also, of course, the quality of the information that you got so far. So when we contrast these 3 categories of methods here, so expert interviews, customer service, and market research, and look at them based on costs, time frame, and best practices, we find the following. We find that in terms of costs, these are, pretty much in the same range. Expert interviews and customer service maybe being a bit more expensive, but then it really depends on the number of expert interviews and the number of respondents that complete your survey. So for the expert interviews, it's usually 800 to 900 euros for an hour for a single interview on the phone. You can't really say in advance how many of these you need, depends on the market. So yeah, it's something like 2 to 8, maybe even 10 if it's a highly specific market. And that gives you some cost of something like 2 to 7K. For customer service, the price of an individual case, so that's a set of answers by an individual respondent, really depends on the specificity of the market. So if you're doing a very general survey in a, let's say, advanced country or developed country, it may just be something like 250 for a single case. If it's a niche market in a developing country, it could as well be something like 10 euros for a single set of answers. So that's also a factor that's crucial in deciding whether you really want to go for a customer survey. Also, the number of respondents drives your cost. Usually you want at least 1,500 answer sets, but it's not a bad thing if it's a bit more. And that's also the reason why market research still is interesting, because there's actually also free market research that can be insightful. So reports, yeah, you can buy those. There are reports that cost some 5K. I'm not really sure if it's worth it, because there are other sources that are much cheaper. Especially always look for other consultancies that are publishing their studies for free. So all of the top strategy and management consultancies do this. Also look for internal sanitized case studies. There's a lot of knowledge within a consultancy. Usually you just need to find it. And another really good source is also the client. They may have a sales concept, may have analyzed the market in depth. They may have studies at hand that they can provide to you. So here costs really vary. Statistics, where you will know those sites where you can get statistics on a timeline, can be useful sometimes as well, of course. So as for market research, it's not really that clear in advance what you can get out of this. It also makes sense to just ask a working student or intern to have a look into this. Also, consultancies sometimes have their own research department that you can ask to conduct some basic research. They can also collect numbers, let's say, that are a bit distributed. So let's say, for example, if you were interested in the number of employees of public authorities throughout a country, and there wouldn't be such a statistic in general, you could ask the research department to, Google this and put it together in a table. And when we look at the next category, so time frame, market research is also quite flexible. You can always decide if you want to go deeper or not. With customer surveys, you become a bit more invested in this if you start this. So usually you need something like 3 to 4 weeks to complete this. You need to first prepare the questionnaire. Then you need to collect the answers, which, depending on the market, takes something like a week. And then afterwards, you need some time to perform the analyses. Expert interviews, usually you can conduct them a bit quicker than doing a customer survey. Sometimes experts do not have time right on the spot, let's say, so you may need to wait a little bit for them. But usually you can do this within 2 weeks, and the analysis you can do more or less on the fly. So this is a bit different from customer service, for example, where you really need to wait for the results to pour in. You can do some pre-analyses while you're still collecting the answers to, for example, prepare the quality checks. But with expert interviews, you're a bit more flexible in terms of this here still. Now, as always, there are some best practices, let's say, for expert interviews. One of these is to know that usually you can end the expert interview at a certain time cutoff threshold. So it's something like 5 or 15 minutes usually. And if you're not satisfied with your expert, you can just end the call. And that's also an opportunity to exercise pressure and ask really important questions just before this cutoff threshold, because most experts are also a bit reluctant to share information, especially if you ask for numbers. So they may feel more comfortable to provide ranges rather than, exact numbers. So that's just something you can be aware of and then use it for your advantage. For the customer survey, we will also have a more closer look into this in phase 2. It's important to do a soft launch at first with a limited number of respondents to check, for example, if respondents really understand the questionnaire. Because if you just run the survey, collect your 1,500 answer sets, and then find out that somehow they didn't get your questions, then you spend some, 5K, and you do not have a useful database. And for market research, chatbots these days can also be asked to read through reports, provide summaries, and also answer your questions. So this can save you a lot of time. Another thing I should mention here is that it's not on the slide, but when you check the pricing for GenAI chatbots, you will find, compared to those cost numbers here, these are ridiculously cheap. So you can get a pro version of a chatbot for something like $25 a month, and that's really bang for the buck. So that's why it usually makes sense to use these all the time, and also triangulate the answers of several chatbots with one another, which also makes sense because of the first drawback of these chatbots. So there are really 3 main drawbacks of using a GenAI. The first one being, sometimes it's just not in the mood to answer your questions. This especially happens, it seems, if you already ask a lot of questions on a specific topic, and then, it just tells you to Google stuff yourself and links a market study for some 5K euros, and you just think, hey, actually 2 days ago I asked you that very same question, and your answer was really good, it was insightful, you provided a lot of detail, and now you tell me to basically to fuck off and do it myself. And if that happens, obviously you can ask a colleague to continue the analysis. You can turn to another GenAI and ask it. So, it's not that much of a bad thing, and usually after a day or 2, the mood of the GenAI also changes back to helpful. The good thing about this first drawback is that it's obvious if it's happening, which is not necessarily the case for the other two drawbacks. So non-Mises splits. GenAI really sometimes provides answers that are insightful, but these categories that it provides, they overlap. So this happens for both qualitative and quantitative splits. To give you an example for the qualitative splits where this happened to me was that I asked it to segment the fashion markets, I think based on price. So, eventually at the core it was about price segments such as luxury, affordable luxury, premium, mid-market, and a few more. And then at the very end, it provided 3 more categories. One of them was plus-size fashion. And while arguably plus-size fashion is an interesting segment, it just is not Mises if you are actually looking at price segments, because in each of these other price segments, there's plus-size fashion. So I don't want to criticize it too much here because it was being insightful, but it was not being Mises, and that's kind of a problem, as you know, so watch out for this. In terms of quantitative splits, what sometimes happens is that you ask for a distribution, so you distribute 100%, and then you ask for changes to that to extrapolate it to the next years, and then it provides some deltas, and if you sum those deltas up, you will find that in the next year, you do not get to 100%, you get to, 104%. And of course, you could interpolate this to get back to your 100% distribution the next year, but it's just something you need to be aware of and watch out for. So do not right away trust the numbers. They could be not Mises. And this also links a bit to the third point here, numbers don't reconcile. So it seems there's not a common ground really in terms of numbers sometimes. If you ask for numbers, let's say from 2 different directions, so if, for example, market size, you once asked top down for it and you get to something like 70 billion, what seems to be reasonable. And then, you start with customer segments and their distribution of spend across price segments. And then you complete this with the number of customers in these segments and you extrapolate this back to market size. You'll find that you're really off. It's like 3 times the market size of the market size that you get when you directly ask for this or do a top-down sanity check. So just be aware of this. It doesn't mean that the distributions can't be used. So if you don't have any other information, it might just be useful to use the percentage distributions. But be aware of this, that numbers don't necessarily go together when you ask for things from 2 different directions. Now, for both the second and the third drawback, it's always possible to explain to the GenAI what's wrong and ask it to fix it. Usually that works just well, but still, it may impede your trust in the numbers of the GenAI.